computer, yes. Okay. I think, okay.
All right, I'm admitting all.
Hi, everyone. I'm Barry Stiefel, and for some of you, if you've turned in and you're thinking, wait a minute, I thought this was an insurance session, not a virtual events or a tech session. You're right. I'm wearing a little different hat today. I'm a board member of Marina Bay Condo Association, along with Rick Yale, Jessica Charters, Wally Yip, and John Parola. And today we are going to have Eric Kaufman talk about condo insurance, which is a topic I think that most people really don't understand. The concept of detached condominiums is a strange one. And it's not only strange to us, as Jessica will talk about at the end, it's strange to mortgage companies as well. So what we're going to do is I'm going to turn it over to Eric, who will go over, an overview of the insurance, and then condo insurance, the master policy, and then we'll get right into the HO6 personal policies. We had solicited questions. We didn't get many questions. So if you have a question, put it in the chat box. We'll monitor the chat box, and we will ask Eric. We'll pose those questions to Eric. We are also recording this, and the link to the recording will be sent out. I think Veronica will send it out. We'll figure out where to post it so that you can review this, or people that weren't able to join us will be able to review it. We also have invited, aside from Marina Bay Condo, we've invited Sailside, our neighbors at Sailside, whose insurance profile is very much the same as ours. So this session would be apropos to them as well. Other than that, I think ground rules, everybody please remain muted. I'm going to remind myself of that as well. And with that, when Rick Eric is done, Jessica will talk very quickly on mortgage companies and their understanding of what you should do if your mortgage company had a question about the insurance, if you went to make some changes and they brought it up. And then Veronica will talk about the claims process, which I think is pretty important for everybody to understand. So without further ado, let me turn it over and thank ahead of time Eric Kaufman. And take it away, Eric.
Well, it'd help if I unmute myself. There we go. All right. Can you guys see the screen sharing?
Yep, sure can.
Yep.
All right. So what I thought I would do would just kind of give you guys a high level overview of the master condominium policy and then kind of get into the HO6. So the bullet points on this handout are kind of geared towards the master policy coverages and what we're covering now. So our property coverage at Marina Bay is written on a blanket basis with a total insured value of just over 99 million. It's written on a blanket basis, meaning we have up to that full limit of insurance in any one claim for any one building. It's a good way to write property insurance when you have a lot of different locations or a lot of units, because it does give us a little bit of cushion. So again, we're covering property out at Marina Bay of all the units for just over 99 million. The property deductible is $5,000 per occurrence for all perils except wind, hail. Because we live close to the ocean, our wind, hail deductible is 1%, and that's per building, not per claim. Per building, not per claim. So in this example, you have a $600,000 home. You multiply that times 1%. Your wind hail deductible is $6,000. The cause of loss coverage form that we have for the master policy is on a special form, which is in the commercial property world about as broad as you can get. It basically covers everything unless it's excluded. And below there, I kind of listed what's covered on a special cause of loss form. I'm not going to read them verbatim, but I think it's important to address what's not covered. And two things that are not covered are flood and earthquake. Those are two common exclusions on the special causes of loss form. Obviously, flood being the most important to you all. At this point, a majority, if not all, to my knowledge, units at Marina Bay are in what's called a Zone X or a preferred zone. Obviously, mapping changes all the time, and I know we're buffering up to the Zone AE, which is a special flood hazard zone. But at this point, a majority of the units are in a Zone X. And because of that, the bylaws state that it's not required of the council to purchase flood insurance on behalf of the association. So at this point, it is a personal choice for you individual homeowners to buy flood insurance. The next bullet points are kind of just liability coverages. Our general liability coverage is basically covering the association for third-party bodily injury or property damage claims. We have limits of 1 million per occurrence and 2 million aggregate. In addition to those primary liability limits, we also have an umbrella policy, which provides an additional $5 million in liability coverage for the association and the unit owners for any injuries or, again, third-party liability claims resulting from common areas. Directors and officers, obviously, for the folks that serve on the board in their capacity as officers of the association, we want to make sure that they're indemnified. So we do have a directors and officers liability policy with 2 million in limit, and the umbrella does follow form over that. Lastly, we have theft and fidelity coverage of 100,000, which I will work with council on to possibly update at this most recent renewal, but essentially that covers the association's funds that are in the control of the volunteer board members, committee members, and even property management company. But again, we'll revisit the limit with the board at renewal when we're going through the renewal quoting process. And I think it's important to note that all coverages are placed with admitted insurance companies that have AM Best ratings of A, excellent, or better. Yeah, not all coastal communities can say that, to be honest with you. As some of you might have experienced with your personal insurance, it's getting more and more challenging living along the coast and buying insurance, covering your homes and your property. But we're fortunate enough to have our property insurance with Hartford Mutual, who's an excellent 8 admitted insurance company. And right below that, I'm just giving you guys some contact information. You know, you guys probably get mortgage company, you know, if you have a mortgage on your home, you're going to get a request for evidence of insurance from the master policy. And I would say if you're used to working with Legum and Norman and facilitate the request through them, that's perfectly fine. They can funnel it to us. But I did want you all to have this information as well, where you can either fax or email us these evidence requests from your mortgage company to Ashley Clow here at my office, who's my account executive, and her turnaround time is pretty good. And we handle a lot of these requests directly from the banks. So I wanted you all to have that information. So that in just very high level, because I don't want to spend too much time on the master insurance coverages, but I think it was important to let you know the limits that are out there. I just wanted to give you guys a quick overview of what's covered on the master policy. I'm just gonna keep this moving here. So when it comes to insurance and master policies, the code of regulations or the declarations kind of dictate the insurance responsibility. Okay, so if you've been involved in a claim with a condominium, the first thing a claims adjuster is going to ask, whether it's an HO6 adjuster or a master policy adjuster, is please send me a copy of your bylaws. Please send me a copy of your code of regulations, because the governing docs will dictate the insurance responsibility process. So what I did here was I took an excerpt from your Code of Regulations, section 16, the first paragraph, which is kind of the meat of it, section A, which again, I'm not going to read verbatim, but essentially this is saying that the council is purchasing a master policy to cover the common elements and the unit as it was originally built or installed by the developer or original builder, but does not include any improvements or betterments that the unit owner has made after the fact, nor does it cover any personal liability or personal contents coverage that belong to the unit owners. So essentially, in layman's terms, our master policy is, even though they're single family structures, is technically in original spec, all in policy as originally built or installed by builder. Okay. Well, what does that mean for you all as individual unit owners and your HO6 policies? So if you scroll down here, the coverage A, building coverage, is your dwelling coverage on your HO6 policy. It's pretty inexpensive. So even if you've done no building upgrades or alterations, you know, this coverage will actually help pay for the master policy deductible for claims that are underneath that $5,000. We've had a couple cases out at the Marina Bay where the deductible was, or the damage to the unit was below the $5,000 deductible, and the unit owners were able to seek coverage for that, you know, on their HO6 policy in coverage A. And then the unit owner would only be responsible for their HO6 deductible. Your contents coverage is going to be basically just you know, your personal belongings, and I'll defer to you on that. The loss of use coverage. So your you know, you have a fire and the unit's completely total loss. The association is going to put the unit back to its original state, but during that time, the association has no insurable interest in your loss of use, which is your temporary housing expenses or your rental income. So this coverage D under your HO6 policy is going to be where you're going to pick up, obviously, your temporary living expenses, or if you are getting rental income from the unit, it's going to cover that exposure as well. Personal liability, I will defer to you all on that, but I will say if this is your primary residence, you know, the standard personal liability coverage you should have is $500,000. You know, obviously, I would recommend a higher limit or even an umbrella policy if needed. You know, if this is a secondary premises residence for you, they're probably, the HO6 might only give a $300,000 liability coverage. Again, would recommend probably an umbrella or you know, a higher limit if possible. This is probably the most important thing: loss assessment coverage. So this is an endorsement, and I'll show you the endorsement form later. But you know, as being part of a condominium, you can be assessed for a shortfall in insurance proceeds or a large, very large deductible if it's a covered loss and the association doesn't have the funds to cover it, either the deductible or the lack of insurance funds. And an example of that would be, I told you we carry, you know, just over 99 million in property coverage for all of the units. You know, again, hypothetical, total destruction, you know, and it's really $100 million to replace all of the units. So we're only carrying just over 99 million. So there's that $1 million shortfall in insurance proceeds from the master policy that the council, on behalf of the unit owners, is going to be left holding. So what would happen in that situation is that $1 million shortfall would be divided amongst all of the 229 unit owners at Marina Bay, and you know, that equals $4,000 some odd dollars per unit owner, and that will be covered under a loss assessment coverage endorsement on your HO6 policy, because it triggers coverage. It was a covered cause of loss. However, the association did not have sufficient coverage to totally rebuild after a total loss. So the shortfall, again, can be assessed to all unit owners, and that can be covered under your HO6 policy in the form of what's called a loss assessment endorsement. And I can pull up and show you that coverage form. That way you have it. I put in here, recommend at least 10,000. I know some carriers, I think USA might be one of them. They offer up to 50,000, I think, and it's fairly inexpensive. But it's a very, very important coverage for you all to have as individual unit owners belonging to a condominium association.
Eric, do you mind if I jump in here with a question? It's Veronica.
Sure.
Because I've heard people shorthand this by calling it special assessment coverage. So can you clarify that this is truly loss assessment coverage and wouldn't cover every special assessment? If the board decides they want to build a clubhouse on their common property and special assesses everybody, this would not be coverage that would help them pay that special assessment.
That's correct. So it too much information, but so what triggers coverage under the loss assessment coverage is there has to be a loss. There has to be a covered cause of loss to the master policy or the association. So I use the example of a catastrophic fire or windstorm or something just terrible, a sudden and accidental peril that destroys everything. And that's why you have to assess. That's what would trigger insurance. Yeah, a special assessment because of a maintenance related item or something like that is not an insurance matter, correct? I put in here the flood insurance policy. So again, this is kind of where I know there's a lot of confusion with single family condos, but this is kind of where it helps you all from a flood insurance perspective, because you really do have, it's your personal choice whether you want to buy flood at this time. And technically, aside from the few clusters, there are individual homes that you would buy flood insurance for. So you're well within your right as individual unit owners to contact your personal insurance agency and say, at this time, a majority of our units are in a zone X, so the council does not purchase flood insurance on behalf of us owners. I'd like to quote a flood insurance policy for my unit. They would run what's called a flood zone determination to see if you were a zone X or you were a zone E. And if you were a zone X, you could buy a policy probably with 250,000 in dwelling coverage, which is the NFIP max limit required by lenders, and $100,000 in contents coverage. And the annual premium, might be $600, $700, which to some of you might be worth it. So I think, while the single family concept does create a lot of confusion, that's one area where I think right now from at least flood insurance, it helps you all make that personal choice for your individual unit. And then I always add this in here because, again, all of this is insurance information. Insurance is, catastrophic, sudden and accidental perils. It's not a maintenance contract, and there's always different sections of code of regulations or bylaws which dictate maintenance responsibility. And I can assure you that all of the unit fixtures located within the unit are probably the responsibility of the unit owners to maintain, repair, and replace as needed. So I think that was it in terms of just high level bullet points. I want to pull up, if I could, the loss assessment endorsement, which is attached to HO6 policies, because it was a question that came across. So I'm just going to click on this. So somebody had it specifically asked for the form number. And I can't speak for every personal insurance company out there, but this is the ISO form, which is up here in the top right corner, the HO 0435. Edition date 10. And again, it's called loss assessment coverage. And you would want to obviously get quotes for limits that you feel comfortable with. And they would put the limits of liability in here. And then I would just clarify with them, some carriers will cap it on what they will pay towards a master policy deductible. some, 5, 10,000, whatever it might be. So I would just, every personal carrier is different, and I don't want to speak to what their particular underwriting guidelines are. But it's a discussion that you should definitely have with your agent. And then if I could, I'm just going to click over to one more screen. This is the complete section of the bylaws of where the insurance is. And I can certainly give these to Veronica. But I think, again, it's important for you all to give these to your personal insurance agent as well, if you haven't already, because as I mentioned, when it comes to condominium insurance, the code of regs and the bylaws kind of dictate that insurance responsibility, and they should have a copy of this for their file. And I kind of highlighted section 16 there, starting, and it goes on to say quite a few things, which obviously the required coverages of the council, I've kind of made sure that we're meeting those limits. But you all should have those, and again, provide those to your personal agents if you haven't done so already. So
Eric, it's Barry. Few questions for clarification. With respect to HO6 insurance, what I seem to recall is an example of turn your house upside down, and whatever falls out of it would be covered under your personal policy. You made reference to the aspect of original versus, I guess, additions. So, for instance, you add a porch, an enclosed porch to your house, you buy your house and it has an enclosed porch. That would be covered under the master policy, correct?
Not if it was done after the original.
Yeah, no, I'm sorry. You
Okay.
buy your house and the house was built with a porch.
Correct.
But after,
As long as you're the individual, the person who bought it from the builder.
yes, that's what I meant.
Right.
Thank you, Veronica. So you buy your house, and whatever your original builder did, including, let's say, an enclosed porch, would be covered under the master policy. But if you added that either after or you did it while the house was being built, but it wasn't the original builder, that would be under your personal insurance. Is that right?
That's correct.
Okay. Then a couple of other questions. Just when people are looking at their coverages, they go back after this session and they look at their coverages and they want to know, okay, I want to make sure I have the coverage that will, I want to make sure I have an endorsement that will cover that deductible. What should they look for in the policy? What is you mentioned it, but I want to make sure, what would the coverage actually be? Is it the deductible coverage itself? What's that endorsement?
So there, and I don't want to speak for every personal insurance carrier, but in my experience, most of them will handle it under their coverage A dwelling.
Okay.
Because what will happen is, like, let's say there's a water damage claim, or I think we had a lightning strike with one claim, and it was underneath the $5,000 deductible. The HO6 carrier and our carrier work jointly, as they should. No matter how little you think it is, Veronica should get into this, but you should always work through Veronica, because we should put both carriers on notice. And what'll happen is, if the estimates come back and they're below the deductible, Hartford Mutual typically writes a below deductible letter to give to the HO6 carrier, and they would handle covering the dwelling portion of the claim under their HO6 policy, which is that coverage A.
So if someone wants to call after this session, someone wants to call their insurance broker or their agent and find out if they have that coverage, they should ask that agent, do I have what would?
Do I have coverage towards the master policy deductible? And will my coverage A limit be applied towards the master policy deductible? I guess that would be my first question. What's my coverage A limit? which is your dwelling coverage? And will that be applied towards my master policy deductible in the event that I have a claim and it's below the master policy deductible? The
Okay.
other one would be also, do I have loss assessment coverage?
Yes.
If not, can I please quote it? And the loss on the loss assessment coverage, not only do I want to be covered for the shortfall of insurance proceeds from the master policy, but also any assessment that I might be levied towards a large deductible.
Okay.
I worry about the wind deductible on that one, where because the wind deductibles per building, which is not uncommon. I mean, you guys aren't alone. And luckily you have strength in numbers. So, God forbid, if every single unit had windstorm damage, 1% times all of that probably equals $4,000 or $5,000 anyway. So but you're going to have to assess the entire community association for that shortfall, because you probably aren't budgeting for a $900,000 deductible. So if you had to levy an assessment for that deductible, it would be, again, about $4,000 per unit. My question to my agent would be, how much does my loss assessment coverage go towards a master policy deductible?
So basically what we could take from what you've said is, as soon as this session is over, everybody pick up your phone, call your insurance agent and ask them these two questions to make sure that you have these two coverages, essentially. Maybe not right after this session, but you should do it soon. I guess that's what I take from what you've said.
Yeah, I think it's important. And, and in some cases, let's hope everybody does have an HO6, because, I do insure quite a few condominiums, and some do have single family units. And, at times, I think, while the concept is becoming more and more common in our area, there, as I'm sure Jessica might touch on, there are still times when people kind of force you into an HO3 because you're a single family structure versus the HO6.
Yeah, that's actually a really important point. I had spoken in the past with several people who turned out to have the wrong coverage.
Right.
They thought they had the right coverage because, again, their mortgage company said, yeah, that's the right coverage. And again, the concept of detached condominiums is kind of strange, to most people.
Mm-hmm.
Question with respect to flood insurance: what determines that a loss is as a result of a flood? For instance, so there is a torrential rain, and the basement, of course, we don't have basements, but the crawl space is completely flooded.
Mm-hmm.
Would that, and I file a claim, would I be told, no, that would, that actually you don't have flood insurance, so that wouldn't be covered? Can you explain that concept?
Yeah, and flood insurance is an animal of its own, but I know enough to be dangerous. So the buildup of groundwater from rain, I should say, the accumulation of water from rain at the surface level is considered flood. The only potential coverage that you might have on the master or your HO6 would be backup of sewer and drain coverage. But if it's resulting from an actual flood, meaning lots of rain in a limited amount of time, or any other surface or tidal water, that technically is the definition of the flood peril and would be excluded under the standard insurance policy forms.
We do have a question, and I apologize to those that are on the call that Marina Bay has townhouses as well as single family detached homes. So this question is, please define building. Is a group of 5 or 6 attached townhouses considered a building, or is each townhouse a building? How does the deductible apply if 2 or 3 attached townhouses are damaged? That's kind of a mouthful of questions, but it's
a great question. So the the combination or the cluster itself as a whole, the 5-unit, 6-unit buildings, that's considered one building. So essentially the, in terms of the deductible, if there is windstorm damage to that one building, if that building is 2.5 million, the 1% deductible would be 25,000 versus the 5,000 or 6,000. But technically what would happen then would be that 25,000 is again divided up amongst the unit owners that make up that cluster. So you would all share into that deductible, but it is viewed from the master policy perspective as one building for the 4, 5, 6 unit clusters. They're not broken out individually.
Okay. Any other questions that anybody has? That's the only question I've seen in the chat box. Anything else, Eric, that you wanted to cover?
No, I think again, not, as Barry mentioned, not right after the call, but maybe sometime in the next few days while it's still fresh on your mind, maybe just give your personal insurance carrier a call and make sure that, make sure they do have the insurance section of the bylaws, which I'll give to Veronica that she can maybe distribute, and maybe talk to them about these hot topics, specifically the loss assessment coverage endorsement, and your coverage A dwelling coverage, what your limit there is.
So to touch on another area, but not to get into detail as as we talked about a little bit beforehand, with respect to, we are going Marina Bay, we are going out to other carriers for the renewal of our insurance. What do you expect, if any, as far as the potential for increase in our policy costs due to obviously the rising cost of materials?
Yeah, and again, a great question. So from an increase perspective, I can tell you that you all are a lot better positioned than a lot of other associations who are not with admitted insurance companies for their property insurance, because the surplus, not admitted insurance world right now is seeing crazy rate increases due to capacity issues. With all the development along the coast, insurance companies have to kind of be wary of their coverages within a certain geographical area. And, we're lucky with Marina Bay, where again, Hartford Mutual is a great admitted insurance company. It's been a great account. It's a beautiful community. From a rate perspective, I 3 to 5% tops is kind of what I'm seeing from Hartford Mutual. But you're right. The one concern that I do have is with the rise in construction costs. I want to make sure that we are insuring to value. So it's going to be a discussion that I probably have with you, the council, as we get closer to the renewal date, and as I approach some other carriers, at what limits we're using to make sure that we do have the adequate replacement costs on the policy. That's kind of a long-winded gray answer for you, but yes. I can tell you I feel comfortable with the carrier that's on Marina Bay now. And then, as I mentioned to you, there's another admitted carrier that I do have that writes, around the peninsula, that I would look to offer an alternative quote to, and we can see kind of what limits they're looking at from a replacement cost perspective. The blanket helps, the total blanket limit helps, because God forbid, I hope we never have a catastrophic claim that reaches $100 million worth of coverage needed.
We have a question for someone who lives in Saleside. Interesting question. They said they live in Saleside. The combination, and I'm not sure exactly what they meant, but the combination of the group policy and their HO6 policy is much more expensive than their previous single family home policy. on a much more expensive home in Delaware. Is there a specific reason for this? Are we insuring other liabilities?
Yeah, so I mean, typically what happens, at least from the master policy perspective, is that that policy does not only include the property coverage, but it also includes the liability for the association, an umbrella, the D&O, and all of that is considered a common expense. So typically, what happens is they would take all of the insurances for the community and then divide that up by the number of unit owners, and that's what each unit owner is paying towards their share of the master policy. So if you're looking at it from the perspective of, okay, well, I'm spending $900 or $1,000 a year towards the master policy insurance, and then I got to buy an HO6 for another $600 or $700. So my total cost of all the insurances is $1,700 versus my old homeowner's policy was $1,200. Yes, there's going to be a difference, but there are pieces of the master policy that, as an association, you are responsible for. It's a common expense. So.
Thanks, Eric. Do we have somebody said a question? Should we take out flood FEMA insurance?
Again, that's a personal choice. I would at least get a quote if it's important for you enough to kind of think about it. I would get a quote because right now they've changed the rating guidelines to a new risk rating factor, and I think what the National Flood Insurance Program, FEMA, is trying to do is get more people to participate in the flood insurance, and not just the mandatory people, because obviously, when you have more people paying into it, it helps make it a profitable program versus it's been so underfunded, the past 10 to 20 years. So again, it's a personal choice, and I would get a quote, if you feel strongly about it.
I think at this point, don't see any other questions. So for time's sake, Jessica, do you want to address the mortgage aspect and how mortgage companies can sometimes not understand HO6 policies?
Sure. Thanks, Barry, and welcome everybody. Good morning. I'm going to talk very broadly and try to keep it as brief as possible where it comes to mortgage financing. Condominiums can be very, very tricky. One of my top recommendations, if you are living in Marina Bay in the Condominium Association or in Sailside in the Condominium Association, and you're either planning on selling your home or you're doing a refinance and getting mortgage financing, the first thing that you should do is mention to your realtor or to your lender that you live in a condo. That is for a lot of reasons and not just for insurance. So it's very important that you mention up front that you live in a condominium. When we're talking about mortgage financing, I would say about 95% of the industry is going to be guided by either Fannie Mae or Freddie Mac, the GSEs, or FHA or VA, depending on the type of loan that you are doing. There may be some variances in what I talk about if you're going to, say, a credit union who does not sell their loans, they hold them in their portfolio, they can make up their own rules. But I would say 95% of the mortgage industry is going to follow, they're going to sell their loans, so they have to follow the rules for who they're selling those loans to. When it comes to condominiums, the detached units, the ones that do not have a party wall with another unit, those are treated very differently than the attached units when it comes to financing, except for insurance. So we're always going to require for mortgage financing your master policy, and from the master policy standpoint, the dwelling coverage must be issued on a replacement cost basis. So we don't tell you how much it has to be. We just require, the mortgage company just requires that be insured for replacement cost. And they let the insurance agents determine what that replacement cost is. There's a policy called an agreed value. You could even have that, but even with the agreed value, you still must be insured for replacement cost for mortgage financing purposes. Now, when it comes to the HO6, especially in our neighborhood, because we don't have an all-in policy where it covers the interior of the unit, you're going to be required to provide that HO6 policy, and it's the HO6 is what's going to be required. And for those limits, we actually don't have any requirements for what coverage you have. That is something that you should discuss with your agent. But the difference is the replacement cost is required on the master policy, and for HO6, like I said, that's between you and your agent, but you are required to have both policies and provide them to your mortgage company. And generally, we'll just accept a copy of the insurance policy for the master without adding a mortgagee clause. The reason for that is the individual is not the one insured, it's the association. And then for your HO6, we're typically going to ask you to put the mortgagee clause or the secondary insured basically on that policy so that we know who to go to if there is a loss. So that is a very brief overview on how the mortgage insurance process works. But make sure you're not getting that HO3 policy. That is not what we want. That is not what you should have when you're financing a condominium. It's the master and HO6.
Thanks, Jess. Okay, for this last section, if you haven't taken notes, maybe you want to get your paper and pencil out, because Veronica is going to tell us how we file a claim. What's the claim process?
Hi, everybody. Welcome again. For those of you I haven't met yet, Veronica Radlin, I'm the new community manager here at the Peninsula. So bear with me because I'm new and still learning these things as well. But as Eric mentioned, with the way that you all are structured, particularly in these two associations, what we want to do with any claim that comes through is you're going to want to put your insurance company on notice, and we're going to want to put L&W on notice as well. So any issues that you have, any major damage that you have to your property, it should be reported to us as soon as possible. Kelly Cokie here in the office kind of handholds and manages the process, but you can reach out to us, either give us a call here at the office, which is 302-947-2036, or email Kelly or myself, VRADALIN@legumnorman.com, and give us as much of the details as possible. Also, let us know who your individual agent or broker is, and provide us, if you have a certificate of insurance for your property, if you can provide that to us. That's the first question, I believe, that or one of the first questions that they're going to ask us. For better or for worse, for what it's worth, I've dealt with the L&W claims department number of times over the years. They're very good, very responsive, and very helpful through the process. But again, and I'm repeating things that were said earlier, but what's going to happen is your insurance company and the association's insurance company, they're going to take a look at the policy. The first thing they're going to take a look at is the governing documents, and they're going to take a look at the two policies, and they're going to take a look at the event and make a determination as to where where coverages might fall. So we do want to get everybody on notice. We want to make sure we have each other's contact information for both companies, and then they're going to talk to each other and work it out through the documents that we have in place. So always please let us know anything that rises to the level of an insurable expense, or that you think that you're not sure rises to the level of an insurable expense. Make sure you're bringing those to our attention, and we'll work with your board, and we'll work with the insurance company to work that process out.
Thanks.
Can I just add one more thing, Barry? I'm sorry.
No, please.
Because this is very important, and I see the mistake happen too many times with other associates. With respect to water damage, like a burst pipe or something that needs immediate attention, okay? No insurance company, the HO6 or the master policy carrier, will fault you for taking it upon yourself to call ServPro or any other service master to mitigate the damage that the water is causing. So if for whatever reason there's a burst pipe, because that is a covered claim, in your unit or in your home, and you cannot get a hold of Legum and Norman, you can call one of these water restoration remediation companies to at least mitigate the claim. Turn the water off if you don't know where it's at. and stop further damage from happening. And at that point, you know, those companies are good about documenting pictures, things like that of what they've done. So that way, when the insurance company gets there, you've done everything you need to do to mitigate any further damage, and then you can start the process of the repair. So just FYI.
Thanks, Eric. Thank you so much. I think we all owe you a debt of gratitude for taking the time to do this. I think it was incredibly valuable. For those of you that live in Marina Bay, you have the Marina Bay Condo Board email. So if you have questions that occur to you after this session, don't hesitate to email those questions to us. If you live in Saleside, we can give out that secret email address, I guess, but otherwise you could, of course, email Veronica. Want to thank all of you for joining us today. The board at Marina Bay had promised our residents that we would, aside from advocating for them, at occasional times put on sessions like this, informational sessions. I want to thank Veronica for setting that up. Going forward, if there are any areas that any of you feel maybe would lend themselves to a session like this, please let us know. Otherwise, I think we've no more questions. So wait, maybe there are 2 new questions real quickly. Note, these are just thank you, Eric, for an excellent session. Thanks, everybody. Talk to you soon.
You're very
Thank you,
welcome.
everyone.
Thank you all.
Bye-bye.
All right, take care.
Thanks all.